Hello, everyone, and welcome back to another Lunch and Learn webinar. I am your host for today, Mayur Thaker. I'm the Senior Relationship Manager here at Zacks, and again, it's our job and our goal to present to you the most amount of value that you can possibly get out of the Zacks tools. And the Zacks Advisor tools have really come a long way, and we hope to continue to add value to your everyday process and to make your life a little bit easier when it comes to doing your job in terms of due diligence on performing analysis on individual companies as well as mutual funds and ETFs. And so it's a huge world out there, lots of information. Some of it can be information overload. So what I wanted to kind of focus on today is using the Advisor Tools platform to take a big picture look at a company and really understand the story behind the company. Oftentimes we look at, PE charts and, revenue growth charts and other charts and stock charts, but that doesn't always tell us like what the company is doing and what is the story that has been dominating the company over the past couple of years, as well as, what the expectations are, this year and next year, as well as going forward. What's the company doing? Fundamentally that's driving that value, or if there is any value at all to be created. So we're going to use some of the tools available in Advisor Tools to take a look at that. And our two examples for today are going to be AbbVie as well as Amazon. And as always, if you have any questions as we go along in this presentation, please feel free to enter your question into the GoToMeeting webinar panel. It's the panel that is tucked away on your upper right-hand corner of your screen. You can just enter a question into the question section, and I will spend the last couple minutes of our call today just answering those questions. And again, if you think of any other questions after our presentation, feel free to email us at zat@zacks.com. That's zat@zacks.com. So let's get started. So I'm going to log into the Advisor Tools platform here, and I have, this is my homepage. I have, my own stocks loaded up in here, and the best way that I would go personally, in terms of just getting up to speed on a company, to understand what the story is behind the company, right? What's the first thing that I would do? So I would enter the company in, and we'll start with Amazon. So I'm going to type in Amazon in here, AMZN. And, there's a lot, as you can tell, there's a lot of information, right? We at Zacks, we comb through lots and lots of information, both quantitative as well as qualitative. So sometimes it can be overwhelming, right? And so it's our job to really help you through that. So what would I do if I were looking at Amazon or any other company? Let's say a client calls you up and asks you, hey, what do you think about this stock? How would you go about understanding if you're not already familiar with the company? What would you do to go into it and to understand what it is that the company does and what are their key performance indicators? Meaning, what are the metrics that the market, that Wall Street is following for that company, to understand what the trend is, what the fundamental trend is of that business. So step one, the first thing that I would do is I would look at the Analyst Report. So the Analyst Report link is right here, and I already have it pulled up, so we don't waste any time with that. But that link is right here from the key metrics or the key stats page on your Advisor Tools, and that will open up this report right here in PDF form. And a lot of times people say, okay, well, I don't really read analyst research. Analysts are always wrong. There's, things always happen that, analysts didn't predict. And that's not really what I'm trying to explain here in terms of, I'm not telling you to take our research, for granted, or, take our word for it. But if you look at this report here, I actually go straight to page 2 of this report if you want to back up and get a big picture overview of what the company does. So obviously there are estimates in here, there's forward-looking statements in here, but page 2 of this report really gets into what is the facts of the company itself. Like, what does the company do? And that's not very controversial. That's not a forward-looking statement. You can see here that the overview is written right here in a very concise way. So we can see here that Amazon.com is one of the largest e-commerce providers with sprawling operations in North America. Its online retail businesses revolve around the Prime program, well supported by the company's massive distribution network. Further, the Whole Foods Market acquisition helped Amazon establish footprint in the physical grocery supermarket space. So just in that first paragraph, we figured out that, okay, they're an e-commerce, giant. They have this program called Prime, and then they also acquired Whole Foods. So in case you were living under a rock for the last 20 years and you don't know what Amazon is doing, this one paragraph helps you understand exactly what they're doing. Now, the next paragraph also gets into some very, very critical information. Amazon also enjoys a dominant position in cloud computing market, particularly in the infrastructure as a service space, thanks to Amazon Web Services, AWS, which is one of its high margin generating businesses. So again, right off the bat, we just realized that they are an e-commerce giant, which means that they're a retailer, right? They sell physical goods. But at the same time, they're also a software company, and they provide infrastructure as a service, IaaS, thanks to Amazon Web Services. So they're both a retailer, they're also a distributor, and they are a software company. So that tells you 3 major points about what Amazon is doing. And over here, you can just quickly see in less than a few seconds the trend in earnings over these last 5 years, and then also the forecasted earnings for the next for 2020 as well as 2021. So you can just quickly eyeball this and see that, okay, we're expecting a little bit of a dip this year in profitability, followed by a massive reacceleration in 2021. And then down here at the bottom, interestingly, despite the shutdown, you can see that analysts are still projecting increasing revenue. So at the bottom chart is telling you what the revenues have been over time, and the top chart is profitability. So just in less than a few seconds here, we just realized what the top 3 business segments are for Amazon, as well as what the key trends have been on earnings as well as revenues. So you can just quickly look at this chart and decide for yourself, okay, is the trend looking good or not? So this is Amazon. Obviously, everybody knows what Amazon does, but let's say your client called you and asked you about a tiny company that you may not be familiar with. Again, this page 2 of the analyst report is the first place that I would go first to get up to speed on a company. If you're not familiar with it, or even if you are familiar with the company, it's still good to read this report because there may be aspects of the business that you're not familiar with. So everyone knows what Amazon.com is because most of us use it to order things. A lot of us have the Prime subscription, right? So we know what those are, but far fewer of us know about Amazon Web Services because that's more of a business-to-business service. So we may not be fully familiar with everything that a company does. So that's why this page 2 of this analyst report is not really any kind of forward-looking statements or anything like that, but it's really to get you up to speed on what the company is actually doing and what the key financial trends have been in the past, as well as what the forecasted numbers are by the analyst community for the next 2 years. Okay, so that gets us up to speed very quickly on that. Now, the other part that I would also look at is diving into these specific numbers. Like, let's say we wanted to know, this is showing us the total earnings picture of the company and the total revenue picture of the company. But let's say we wanted a breakdown of where these revenues are coming from, right? How much of this is coming from their retail side? How much of it is coming from, let's say, the US market versus international? How much of it is coming from Amazon Web Services? So what if we wanted a breakdown of all of the segments that the company operates in? Then what I would do is go back to our advisor tools. So the second step that I would do what the company is doing is click on this consensus model link. So this is the second step I would take. First step is I would read page 2 of the analyst report just to get a big picture idea of what the company does. Then over here, step 2 would be our consensus model. And this is going to open up an Excel spreadsheet. And I have it open up here already, so we can just dive right into it. But you can see here that this Excel spreadsheet, there's a lot of information, right? So again, it's going to be information overload if you are not used to seeing full financial modeling and forecasting. But this is why I'm going to, condense it down into just one thing for you to look at, which is on this Excel sheet, you'll see a tab called Segment Details. And the segment details are where it breaks down where the company is deriving its revenues from. So I'm going to highlight this so that you can see this a lot clearly. So I'm going to take these numbers here for 2020 and beyond, and I'm just going to highlight that so you can just separate that out from the historical actuals. So you can see here that this is all 2019 data, and these are actual numbers. And then starting with these yellow highlighted cells are the forward-looking forecasts. And again, we at Zacks, we are constantly compiling this data. You can see that this model was actually updated today. So we're always collecting estimates from all over the street, from all analysts that cover these companies. And we distill that into a single model that's available to you right here. So you can see here that here are the key revenue segments. The first one is total North America sales. That's the bread and butter of Amazon. That's where the vast majority of their revenues come from. And you can see that right here. $170 billion they did in 2019 from North America. They did 74 billion from international sales. And here's that AWS. You can see that AWS is actually a relatively small portion of their total revenue, at 35 billion last year. And look at where that's projected to go this year. What, from 170 to 213 this year. From 74 for international to 88 billion this year. From 35 billion AWS to 45 billion this year. So you can see just very quickly within a few seconds that each and every one of their top 3 segments are projected to grow from last year to this year, despite the COVID, interruption, despite, these, the riots that we're seeing right now. Despite all of the other challenges that we've seen in the global economy, you can see that Amazon is actually projected to grow its top line revenues in each of these 3 broad categories this year. And that's expected to continue into 2021 as well as 2022. So just in a very quick, and short time frame, I'm just kind of verbalizing this, so that's why it's taking a little bit more time. But if you establish this routine, then you can be very, very fluent in discussing these companies with clients. So in case, a client again comes in and asks you what your thoughts are about Amazon right now, then you can, very quickly look at these numbers and say, to them that this is, what the expectations are. And that's why we're recommending Amazon, to be held in your portfolio. So that's just as an example. And you can continue to kind of drill into this. This is the first 3 that we saw are the broadest categories of revenue, contributors, but you can see that the next section is broken down a little bit more so that you can see here that online stores, are projected to grow from 141 to 173 billion. Physical stores are expected to grow just slightly from 17.1 to 17.9 billion. And so you can kind of see that and drill down into each of these individual segments. And again, see where that growth is coming from on the revenue side. However, if you go down here, I'm going to skip a little bit here. And this is where I think a lot of, critical information starts to present itself. Ignoring, aside from the revenues, let's skip down to the operating income level, okay? And just, stay with me here for a second. So operating income, that gets more into profitability rather than just revenues. So you can see here that if you check out the North America operating income, so after we account for revenues minus all operating expenses, this is that operating income or operating profit, level. And last year they did $11.5 billion in operating profit from North America. And look what's projected to happen this year. That's actually expected to go down. So we saw just a second ago that total North America sales are actually projected to increase this year. However, at the operating income level, so by the time you account for all the expenses, that's actually projected to contract this year, for fiscal year 2020. Now that's projected to rebound very, fiercely in 2021. You can see that bounce back there to 15 billion and 21 billion thereafter. But interestingly enough, even though they're projected to grow the top line, they're actually expected to take a hit at the profit level from North America. And you can see here on the international side, they're actually expected to lose money this year from international operating income. Now that's expected to, to rebound next year and the year after, but you can see that, both North America operating income as well as international operating income are expected to go down this year. However, here's the white knight. If we look at this now, and we go to the third section of where they generate revenue from, AWS operating income, and look at that number. That they did 8.9 billion in operating profit last year, and look at what they're expected to do this year. 16 billion, 19 billion thereafter, 23 billion thereafter. So you can see there, just from that point alone, that AWS is lifting the entire company up. So despite the fact that they're expected to drop on, North America and international operating profits, AWS operating profit growth is expected to, more than offset, those declines. So you can be very, very, conversational with the company in just these few minutes that we spent here looking at this model. That AWS is really where the profit driver is for Amazon. Okay. Now you can also go back and look at, how has Amazon performed relative to these different fundamental metrics, right? So the third thing that I would look at, so after we just established, what the company does, after we established what are the primary drivers of the company's revenues and profits, the next thing I'll look at is, well, is it a buy, right? Is it a buy right now? How has the stock reacted versus these fundamental, performance indicators? So I would go to this chart right here. I'm going to go click on this fundamental chart. And this is going to bring up a chart that I actually had created previously. And I have AbbVie in here, so I'm just going to uncheck this for now. But I have, just 4 things that I've added to this, which is the price performance, revenues per share, EBITDA per share. That's kind of like your operating profit that we just saw, operating income, and then earnings per share. And you can see all 4 of these in one chart like this. And you can just quickly look at this and say, okay, over the last 3 years, Amazon stock is up 145%, right? So most people might think that that's a lot, it's already run up a lot. So I think it's, I'm scared to enter into the stock now because it's already had this big run up. It's multiplied by more than, 2.5 times. Am I too late in getting into this? Well, if you look at it, compare that to revenue growth, right? Revenue growth over the same time period has doubled, right? 99% revenue growth. You can see that the legend right here, the black line is revenue growth. So revenue have doubled. However, the stock price is up 145%. So the stock price is outpacing revenue growth. But if you go to the next one, right, this green line, that's the EBITDA per share, and that's our operating profit. And that number is up 173% over the past 3 years. So EBITDA has actually outpaced the stock price. And then lastly, if you look at earnings per share are up 431% over the same 3-year period. So this 145% growth, in the stock price looks like a lot, but if you look at how quickly their fundamental profitability numbers have grown, those have grown by, a much faster pace. So that's another thing that you can look at and discuss with your clients when you sit down with them and if they ask you, what, you're seeing with the company and whether it's a good buy right now. This is another critical number to look at. Is the stock price moving in relation to fundamentals, Or is it just moving up because, the market is just really, really high right now and people are chasing the stock? So right here is what I would point to look at and say with confidence that no, the stock price has not gotten ahead of itself because earnings have grown even faster than the stock price by almost a factor of 4, or I should say almost a factor of 3. Okay, so that's the third thing that I'd look at. Now, another very, very critical and useful thing that you can look at is the peer analysis, because we may be looking at a company, but what if they're not the best company within that space? In this case, we know Amazon is one of the best. I mean, it may be the best, right? Because it's by far the dominant player in e-commerce as well as AWS. But let's just say, for example, how do we know who else is in the peer group? So I click on this peer group right here, and this is a great way to just quickly understand, who else is operating in the space and what their metrics are. So I can just quickly look at this and say, okay, the biggest companies in this space are, Amazon by market cap. I just clicked on market cap to sort it. Amazon's the biggest, but look at who the number 2 is. It's Alibaba. Okay, and so what are their numbers looking like? Amazon, is the breadwinner here with, $280 billion in sales. JD is the second, biggest at 82 billion. So you can use these different metrics to really understand who else is operating in this space and what their numbers look like. So we can go to, say, for example, EPS actual. And let's say I want to know who has grown the fastest in earnings, right? In terms of earnings growth, who has had the best earnings growth overall. So I'm going to go actually over here to EPS or EPS actual. You can do, quarterly, meaning quarter over quarter or quarter versus same quarter ago. And, just quickly understand who has, the best growth overall. And here we can see that interestingly, eBay is actually the one that has had, the best, earnings growth year over year. And so that way you can just quickly look at and make sure that, you're not, picking the company that isn't, the best in the breed in there. Now, the fourth item that I would look at is the quant model section. So the quant model section right here is where I would quickly look at what the overall picture for these different indicators are. So our Zacks rank indicator helps understand, what the direction of analyst estimates have been. So this is actually a neutral score here. So analysts have not revised their estimates in a strong way. However, that's a little bit more of a short-term indicator. This right here is the big picture number, the earnings quality score. And you can see that Amazon ranks at number 1 in that space. So that is the big picture long-term recommendation based on the underlying earnings, as well as the other metrics that we look at that assesses the quality of those earnings. So I would place a large emphasis on what the earnings quality score is telling you. If the earnings quality score is very poor, then those earnings may not be sustainable. If the earnings quality is very good, then of course those earnings are a lot more sustainable. So I would look at that and place a large emphasis on that as well. Again, for if you're thinking of long-term holdings in your portfolio. So I spent a lot of time on Amazon. I promised we'd also look at AbbVie. So let's just dive into AbbVie and do the exact same thing. And I'll just spend just a few minutes here, not as long for AbbVie as we did for Amazon, but I already have the analyst report pulled up. So again, I would just go back to the the main page for AbbVie and pull up the analyst report for them. So again, I have that open up already. So you can see here that AbbVie is a completely different company, unrelated to Amazon. But again, just eyeballing this within seconds, you can see how they've been growing earnings and how they've been growing revenues. Just within seconds, you can see that this is a very clear and very promising trend. Very smooth earnings growth, very strong revenue growth. However, what are they doing, right? What exactly do they do? You can see here in the very first paragraph, AbbVie has become one of the topmost pharma companies after it acquired Botox maker Allergan. in a cash and stock deal for $63 billion in May of 2020. So this is very timely information. Just last month, they closed a massive deal to acquire Allergan. This deal is expected to transform AbbVie's portfolio and lower its dependence on Humira, its flagship product, which has already lost patent protection in Europe and is due to face biosimilar competition in the US in 2023. AbbVie has one of the most popular cancer drugs in its portfolio, Imbruvica, and its newest drugs, and it's well positioned for long-term growth. So again, right here within the first couple of seconds, you just figured out exactly what they're doing. They've had strong growth. However, we can see in this, in this paragraph that there was a little bit of a concern that they had a very high dependence on Humira, and therefore that's why they bought this company Allergan, is to reduce its dependence on that one drug, and therefore diversify its portfolio. So we can go through all of the same exact things that we just did for Amazon, and I have the the consensus model pulled up, and as you can see here, I'll go into the key drugs tab, and right from the very beginning, I know it's a lot of data here, but just bear with me for a second. I'm just going to highlight this here to make sure that we're seeing only the estimates, and you can see here that if you look at their very topmost drug, Humira, last year they did 14.8 billion in revenue. This year they're expected to do 15.8 billion, so that's pretty good growth right there. However, if you go very, very down into the future, check out what's happening here. Humira is their biggest revenue driver, and look what's happening to it. It's projected to actually decline and dwindle all the way down to $2 billion from 15 billion this year. So that's a big, big concern, right? And so that's why we just saw in that analyst report that they acquired a new company, Allergan, to directly address that. And so if you go through this analyst model right here, it was actually just updated yesterday. If you go through this, this will show you these various different drugs that they have in their drug portfolio. And you'll be able to quickly identify, for example, I already did this, beforehand, but you'll be able to identify how they're planning on addressing that declining revenue from Humira. And you can see here that here's one example. This drug is expected to go from 488 million this year to 1.1 billion, by the end of the decade. So, and there's, at least a half dozen other examples like this, scattered throughout this report here. So again, if you're doing any kind of analysis on individual companies, and if a client has a concern, or if they're just genuinely curious as to what your thoughts are, then these two pieces are very, very critical intel for you to be able to quickly understand, what's been happening with the company. So again, we just saw in these few seconds right here that, AbbVie is a diversified, pharmaceutical. And if I go to this fundamental chart, the reason why I really included this in this report here is because I'm personally very bullish on it. But you can see that AbbVie, the performance of the stock has been 37%. And yet look at each one of these metrics right here. The stock is only up 37% over 3 years. Revenues have grown by 40%. EBITDA have grown by 76%, and earnings have grown by 80%. So the stock has actually lagged each and every one of their fundamental indicators. So to me, I look at this and I see a value play here, and I see that the stock may start to catch up, and maybe the reason for this entire decline has been that concern about their over dependence on Humira. However, they just acquired Allergan, and they're, you can see from that spreadsheet how they're, expecting to address that directly. So, I spent a lot of time, speaking through this here, but the, the way that I would go about, understanding what the company's involved in again is just by reading that page 2. Page 2 of the analyst report is very, very critical. And then the analyst model is also very critical. And we have a question that someone asks, which is, what about companies that don't have analyst reports? Great question. We do have a very large coverage universe of companies. However, if for some reason we don't have coverage of that company, we actually have a much wider coverage of the consensus model here. So I know we have over 1,000 companies that we cover with regards to our analyst reports, but I believe we have double that in terms of our coverage of the consensus models. So even if you can't read the analyst report for a company that you're looking up, I would check the consensus model as well to understand, what the company might be doing. If we don't have coverage of that, and chances are we're going to have coverage of that because that's over 2,000 companies. So unless if you're looking at a very micro cap stock and one that doesn't have much coverage at all, the chances are that we will have at least either an analyst report or a consensus model that we do have. And then if we don't have either of those, then I would, continue on in that hierarchy of looking at the fundamental chart, which is, this chart that I have here that looks at price versus revenues versus EBITDA versus earnings. That way you get a wide sample of top line growth, operating profit, and net profit, all three on one panel. So, hopefully, one of these three, we're going to have, a good amount of coverage on at the very least one of these three. And then, of course, the quant models is where I'd very, very much, check in on and just make sure that the company, has a favorable earnings quality score. The Zacks rank indicator is great too. Like you can see here for AbbVie, it's a very, very strong Zacks rank because that helps summarize exactly where analysts are revising their estimates up or down. So I would just quickly look at that. However, I wouldn't panic if this has, say for example, a lower Zacks indicator rank, like if it's a 60 or 70, I would start to question it if it's very, very low, like in the red range right here, because that means that analysts are really slashing their estimates for this year. So I would get a little bit cautious if it's very, very negative. But if it's anywhere in the middle here or even slightly orange to green, I wouldn't panic with regards to having a sort of a mediocre score, as long as the earnings quality score is very, very strong. Because that's the big picture, because that's looking at not just earnings growth, but it's also looking at key balance sheet ratios too. Like we have ROE in here, we have cash flow in here. Those are two very important numbers to look at to supplement your analysis on, whether a company is, producing strong cash flow as well as a healthy balance sheet in addition to their earnings. So this page right here helps quickly summarize, how their earnings revisions are, as well as, what that, quality of the earnings are. So hopefully, between these 3 or 4 charts that we looked at, the analyst report, the consensus forecast spreadsheet, the peer analysis that we looked at, just to make sure that you're not, picking a stock that is, subpar versus another one that's a lot better, as well as the custom fundamental chart that we just saw. And then lastly, this quant model right here. So these are the top 3 that I would look at just to get quickly up to speed on companies and, perform your analysis thereafter that. So hopefully this was helpful for you guys. Again, there's lots of information here, but I'm trying my best to help you condense this down so that you can really tell a story of what the company is doing, right? We know what Amazon is doing. We know what AbbVie is doing now, just by reading those couple of research reports and going through this sort of workflow right here. So if you have any questions with regards to this, please, do reach out to us. We want to make your life as easy as possible and add value so that you can quickly understand companies and, be able to confidently go back to your clients and recommend or not recommend a company, based on these, top 5, charts that I look at, top 5 elements of the advisor tools that I look at to quickly understand what's been going on with the company. So if you have any questions as a follow-up to this, please reach out to us at zat@zacks.com, zat@zacks.com, and we look forward to hearing from you again in the future. And if you have any ideas on what you'd like us to cover for future webinars like this, again, please let us know, and we'd be more than happy to accommodate that as well. Thanks everyone, and have a good day, and stay safe.